Hello all the Inderes TV viewers and listeners. Sampo published its second quarter results today and I'm interviewing If's CEO Morten Thorsrud. Morten, you had very nice results as usual. What were the main drivers behind If results?
I think it's hard to pick out sort of a single factor. I think this is more a result of good work over a long time period. We have really excellent result in all business areas, all countries. So I think this is, again, more just a result of If being a very stable player over a long time.
If I remember correctly, your revenue growth was 8.4% in the second quarter. And for an insurance company, that's like very high growth. So could you give us a breakdown between how much of that was volume growth and how much was pricing growth?
Yeah, it's true. 8.4% is really record high in insurance. This is the highest growth that we've reported sort of ever. Then it's driven by both price increases and growth. The price increases are roughly 5%, I would say, on the Nordic level. A bit different in different countries, but roughly 5%. And then obviously then the rest is growth in terms of number of customers and sort of objects insured. And we do see a good growth actually in number of customers, both on the private side and on the commercial side, as well actually on the large corporate side. So good growth also in the underlying business, if you like.
A follow-up question on that. Are you winning market share in the insurance market?
Well, let's see. Sort of the market statistics always take some time before they're published, but I think we're winning market shares in some segments and then not in others. I think this is probably at least defending our market share, perhaps having a small growth in terms of Nordic development. So obviously very happy with that situation.
Your profitability was excellent as usual, but how much did the absence of large claims, and on the other hand, you raised your discount rate, how much those items affected your profitability?
Yeah. On the large claims side, we had a little bit fewer or less large claims in the second quarter. The effect of that was roughly 1.7%, which is, I guess, is even quite exact on the combined ratio in the second quarter. On a year-to-date basis, we're more or less exactly on plan when it comes to large claims. So again, we had the benefit from less large claims only in the second quarter then. And then in terms of discount rate, yes, interest rates have been going up during the year. So in the second quarter, we had roughly 5% run-off gain. And most of that is coming from increased interest rates. And then, as you allude to, the raise of the discount rate, in particular in the Finnish portfolio. So that's 5% on the combined ratio in the second quarter.
Then a question about inflation. 12 months ago, Antti had an interview with you, and then inflation was quite moderate. But now one could say it's spinning out of hand or spinning out of control. So how easy it is to transfer inflation to your prices? And on the other hand, how does that affect your claim inflation?
Well, first, for us, it's not spinning out of hand.
Well, okay, it's a bit dramatic maybe.
But you know, inflation is like a key competence for us, sort of working with inflation. And from time to time, we always experience high inflation, sometimes driven by increased frequency, sometimes by more sort of price inflation. And it's correct now for the last 12 months or so, we have really seen increased inflation. Started first within property, with building materials. Now later we've seen also quite an increase on the motor side. But I think we've been good in predicting this and been able to price according to the inflation that we expect going forward. So I think we are pricing in basically both what we've seen and also what we expect to see going forward. But of course, inflation is on an elevated level compared to earlier periods, that's for sure.
Is inflation really a problem at all for you if you can predict inflation or expect the inflation in the future quite well?
No, that's correct. As long as we can predict it and price for it, then it's not a problem. And I think in the current environment, the customers actually do understand that we need to price for inflation. And I think that's actually different than what you see in perhaps sometimes in the past, where we have had a need for increasing prices, but perhaps where it's been more difficult to explain it to the market. Today, I think all consumers, all companies do understand that there is an inflation element also in the insurance price. So in that respect, it's somewhat easier to explain to the market and thereby kind of getting it through to the customers.
This might be the 5th or 6th time when I ask about competition from Sampo management. But what's your take when we see that the investment income is making a comeback because of the rising rates? On the other hand, in the second quarter report, Magnusson wrote that all the competitors in the Nordics have stayed quite disciplined in their pricing. So it seems competitors are not trying to take market share by lowering their prices. But do you see change in the pricing environment or in the competition when we go forward, when you get more income from the investment side?
Well, first of all, of course, this change that we've seen on the interest rate side is a very recent development. And of course, yes, we do see then a clear uptick in sort of the running yield for If. Then also, this is more returning to a bit more normal levels. I mean, we've been in a very abnormal situation now for some few years with even negative interest rates. So I don't see that this is changing the landscape yet. I think it will need to kind of have quite different investment returns before it has an impact. So I think so far this doesn't change anything.
Then could you give us a small update on how is your cooperation and the sharing of best practices going with Hastings?
Yeah. Hastings is now sort of, what should I say, kind of fully integrated as a company in Sampo, and If and Hastings benefit from a very good and deep cooperation. It's really a long list of areas where we now cooperate. I mean, we really put our experts together and they work together in areas like pricing, in areas like digitalization, in claims handling, fraud management. So really a long list of areas that we work on. And I think the most important thing is that it's a good cultural match between If and Hastings, sort of both having management with a culture of being very hands-on. And that creates a good working environment where we cooperate on a lot of insurance matters. Then, of course, the markets are different. But again, a lot of the key disciplines, so to speak, we can actually cooperate on. So that's been really great.
A follow-up question on the differences between the Nordic market and the UK market. It seems that there's a lot more harder competition in the UK than in the Nordics. But what's your take? What are the main differences between the two markets?
I think the main difference is around customer behavior. UK insurance customers are used to working and relating through intermediaries. Now it's sort of the aggregators. Earlier it was a lot of brokers and agents. So it's been always a market where intermediaries has been very strong. So UK, again, consumers are not really that used to having a direct relationship with their insurance carrier. And that's very different than what we have in the Nordics, where you have predominantly a direct market, where the customer have a direct relationship with If or our kind of competitors. And where also then customers tend to group all of their insurances and buy most of their insurance needs from the same provider. Again, in the UK, it's an aggregated market. It's much more fragmented. So I think it's again, mostly driven from consumer behavior. And this is actually not something new again. It's something that's been like this for many, many decades. So therefore, I think in terms of the market dynamics, it's hard to compare UK to the Nordics. And I don't think that the Nordics will become similar to the UK. Those two markets are operating in a very different manner.
Interesting. That was all this time. Thanks for having us.
Thanks for coming here.